Finance News now. Here's reporter Rachel Pupazzoni. So Rachel, we've had some pretty good jobs numbers today.
Yeah, the numbers out today more than doubled expectations from the market of how many jobs would be created, Ros, in June. It appears to be back in the game with almost 51,000 jobs added for the month of June. The bulk of the jobs were full-time, 41,000 of them in fact, while almost 10,000 part-time roles were added. Unemployment remained steady at 5.4% seasonally adjusted. The strong full-time work gain saw hours worked in June increase by 0.6%. Well, let's pick apart some of those numbers. I'm joined in the studio by HSBC Chief Economist Paul Bloxham. Paul, great to have you on set with us. The market, as I said, wasn't expecting such a big rise. What do you put it down to?
Well, there's a lot of volatility in these month-to-month numbers in the labour force survey, so a lot of it is that. We'd actually quite weak employment growth over the past couple of months, so it's a bit of catch-up really, I think, overall. The employment growth overall, though, is quite solid, 2.8% year-on-year, 340,000 jobs created over the past year. That's an above-average pace of growth, but at the moment, most of that labour demand is being sufficiently met by labour supply. The participation rate has risen, so the unemployment rate has actually been tracking really broadly sideways. So there's not much sign of additional tightness in the labour market, so it seems likely that wages growth is still going to stay quite sluggish for a while.
Well, and that is the issue for most people is wages just haven't moved at all.
Well, there's a lot of factors at work there. One of them, though, is that the unemployment rate is still above full employment. Full employment, we think, is 5%. We're on an unemployment rate of 5.4%, and so we've still got spare capacity in the labour market. That's one of the reasons why we think that the wages growth has been so sluggish.
So the RBA will obviously be pleased with these numbers, but it's still really looking for that growth in pay.
Well, they'll be pleased with the numbers because it tells us that the economy is continuing to grow, and it's growing on this number at least at an above average pace. That's a good story. But yes, the RBA is looking out and hoping that it will start to feed through to a bit of a pickup in wages growth because they need wages growth to lift to get inflation back to their target. Inflation's still sitting below their 2 to 3% target band. At the same time, this leaves the RBA with nothing needed to be done. I mean, the RBA is likely to be on hold for quite some time.
When we look at more of a breakdown, what states are doing quite well at the moment?
Well, in the numbers, we saw that Western Australia was on the weaker side. South Australia actually looked quite strong, and we're still seeing pretty decent conditions on the East Coast as well. And so the broad state breakdown is around the idea that Western Australia is probably still a little bit of a laggard in the scheme of things.
And obviously last year, there was those headline figures of 400,000 jobs added, and the government obviously really pleased and spruiking those numbers. Are we on track to see a similar 12 months this year?
Employment growth was exceptionally strong last year. It was a really big number. And so at the moment, we're not quite on track for having as big a number, but the forward partials, the things like the vacancy rate numbers, would tell you that we should see continued strong employment growth. So the broad story is still one that's quite positive, but as I say, what we really need to be seeing is that this starts to feed through to a little bit more wages growth over time.
Yeah, fingers crossed. And of course, I guess, even though those wages aren't growing, there are still an increasing number of people in the jobs market. That is obviously good news for spending in the economy as well.
That's right. So the broader economic perspective here is that we've got above average employment growth running at 2.8% over the past year, and the participation rate's been rising. So more people have been coming into the labour force, and they've been coming into the labour force because there are jobs available. So it's a pretty good story overall.
Yeah, hopefully it continues that way. Paul Bloxham from HSBC, thanks so much.
Thank you.
Okay, well, let's take a look at how the markets have been travelling this afternoon. And we are still in positive territory. The All Ordinaries is up 32 points, the ASX 200 27 points in front. Some of the major movers today include Bega Cheese. It's losing value after announcing it'll spend $250 million to buy Saputo's Koroit dairy processing plant. That's in Western Victoria. The ACCC is taking legal action against Aurizon and Pacific National for alleged anti-competitive agreements. Aurizon shares down on that news. And Woodside is falling amid poor oil prices despite posting a 20% jump in second quarter revenue. On the upside today, construction and mining services contractor CIMIC Group is soaring after it announced a 12% profit increase, and oil and gas producer Santos has reduced its net debt and hinted it may revive dividend payments in August. No doubt investors happy about that. Diversified miner South32 beating its coking coal output guidance for the 2018 fiscal year has seen its price rise today as well. well. Looking at global markets now, and Asian markets have generally pulled back from their gains earlier today. Japan's exports to the US have fallen for the first time in 17 months amid worries about Donald Trump's trade policies. And in the US, the S&P 500 rose to its highest level overnight in more than 5 months. Turning to commodities, spot gold is worth $1,224 an ounce and oil prices are ahead. And the Australian dollar jumped about 0.5% in the first half hour or so after those jobs numbers were released. Right now it's worth 74.23 US cents. Ros, that's the latest from the markets.
Thanks, Rachel.